Every Forex trader out there is making the exact same mistakes. Chasing every candle, loading up their charts with like 5 to 10 indicators, blowing up their accounts, blowing up their fundeds, and blowing up their evals. If I had to start trading again today, I wouldn't be doing any of that. I will be doing the complete opposite. With over 4 years of experience in Forex and using this strategy for many years that only takes me 15 minutes a day, I'm going to show you exactly what you need to look for and exactly what you need to do to be replicating this. I've been through the ups and downs, and I'm going to show you how not to waste years and years of your trading life so you can shortcut your way to profitability as quick as you can. And the best part, this strategy is not complicated. There's not 10 indicators, there's not 5 time frames, okay? There's 1 time frame and 1 setup. That's it. This is a very simple strategy, and it's even easier when you know what you're looking for. So let me lay out step by step exactly what I would do if I was to start trading again today. First off, forget indicators, okay? Watch structure, all right? Structure is very important. Having too many indicators will screw you over. It'll make things so complicated. I'm not a huge fan of indicators, okay? So watch structure, all right? Now RSI, MACD, 10 indicator chart, all these kind of things, you just don't need it, okay? For this strategy, they're completely irrelevant. Just trend direction and break a structure on the 4-hour time frame, okay? That's the strategy. That's all there is to it, all right? And there's only 15 minutes a day. First off, if the chart's a barcode with no clear trend, we skip it, all right? This we can see here is a clear chart. We can see that it's obviously moving up, okay? This is moving bullish, okay? This is what I like to refer to as barcode charts, okay? We can see here that it's just simply going nowhere, right? It just looks like a barcode, all right? So clear charts, first thing I look for, all right? If it's a barcode chart, I don't trade it, all right? This is a big no for me. So forget your indicators and actually watch the structure. Trend, the first filter. So price has to be in a clear, obvious directional move. Looks like barcode with no clear direction. Skip it completely, okay? Just as I'd mentioned before. This is a visual judgment call. No indicator can really help you with this, all right? We can see here from our highs and lows, our structure just continues to move upwards, all right? We can see there's a trend, okay? We've determined the trend, and that's it. Now we can look at it on a real life example of a real trade that I've taken, and I made over $1,500 off it, okay? So you can see here that we have an obvious trend moving up. So we can see, if we mark out our points here, all right, these are our swing points, okay? We can see that there is obviously a trend, okay? We are moving in a bullish direction. Break of structure, the signal, okay? A major swing high or low on the 4-hour has to break, okay? Confirmed by a candle close, okay? Not a wick, a candle close above that level. This is the moment price shows its hand, okay? This is the moment that price shows that it's continuously moving up, okay? So we can see here, we have a break of structure here. First off, what we'll do is we'll mark out our structure. So we got our swing points here, okay? These are our breaks of structures here. Break of structure here, break of structure here, and then a break of structure here, okay? We're gonna be using this example here. So break of structure, after the swing points, it's breaking past these swing points, okay? Breaking this swing point, breaking this swing point, breaking this swing point, okay? We have our break of structure and we have our trend. Okay, for the example we're using here today, we're gonna be using this piece of structure. Okay, so we can see here we have a break of structure right here, and that's that, okay? From this point on, price broke through and it made a new high, okay? So we got a high, low, and then a higher high. So this is the break of structure that we are working with. The fair value gap, a 3 candle gap left behind when price moves too fast, okay? It has to sit within the same leg that actually broke structure. No fair value gap means no valid setup. However good the trend or the setup just looks in general, okay? So what this means is these points here will actually have wicks, okay? And then from these wicks on, from these 3 bars here, we can see that this is our fair value gap, okay? This means that there's been a lot of volume and that there's been a big push up to either the upside or the downside, okay? Where prices shot up and then hopefully we retrace to enter back in near, okay? So that is a fair value gap. It's within these 2 points here of the wicks, okay? So from this point on and this point on, this is our fair value gap. So we have our break of structure and then our fair value gap. Back to our example, so we can see here, we have a fair value gap here, all right? We have a fair value gap here, okay? And then we have a fair value gap here as well, okay? So we can see that there's multiple fair value gaps, meaning that there has been a big institutional move, okay? Just a big push in price, forcing our way upwards, okay? So we have our break of structure and then we have our fair value gaps. the liquidity sweep. Okay, liquidity sweep. Price often wicks through these last lows or highs, whether they are major or minor. Okay, that wick clears out stop losses before reversing hard. Technically, in my plan, it is optional, but it's a very highly recommended. Okay, I rarely take trades without it. I only take trades with it if the trend is super clean and super bullish or bearish. Okay, but line it up with the breaker structure and the fair value gap for the highest quality setup. Okay, which is just a valid setup. So we can see here we have from this little swing point here, price has come down, swept this point, and then shot up, okay, which has left this fair value gap and which has also broken this structure, okay. So the liquidity sweep, we're adding it into our plan. We can see it here, then we'll see it on the real life example. All right, in our example, we can see here that we only really have a tiny liquidity sweep here, right? From this point on, this is what I mean as in the liquidity sweep's not super necessary, but it is good to have. We have a very minor point here with these swing points, okay. Prices come down, grab that, then shot back up to the upside. All right, so there we have our liquidity sweep within this example. Now we've got the entry. So how do you actually enter this trade? Okay, so that's pretty much the trade. That is the whole trade. Okay, it's those parts all combined. When you see that on the charts, that's when you take it. Okay, that's when you set your order. So you anchor the fib from the swing low to the breaker structure high, or reverse for bearish. Okay, so from here, I anchor it from here, moving up to here, or pretty much just left to right, really, depending on whether that's bearish or not as well. Entry sits at the 75% retracement, or the 0.75, as we can see here. It's a limit order, okay? So you let price come to you, you don't chase it, you don't enter in off the market here and hope for a take profit or something. You set your point here, okay? And you wait for price to tap in and then either hit take profit or tap in and hit your stop loss, okay? Not every trade is going to be a winner. It's totally fine and normal for price to continue running, okay? And you never enter the trade. If price just continue to move this way, okay, like this, all right, that's totally fine. We cancel this trade, we move on, and that's it, okay? Because price might move around like this, okay? And then we enter off here, okay? We have a liquidity sweep, we have a break structure, and then we enter in from this point, and then here we have a successful trade, okay? We weren't forcing anything because we really wanted to enter in off the trade, okay? We stayed patient and we've taken the right trade, okay? So totally fine. You have to be patient, okay? Especially on the 4-hour time frame, you have to be a very patient trader. So place your fib, okay? Enter in off the 75 level, wait for price to tap in, and then either from there, take profit or stop loss, okay? So those are the entry requirements. Okay, in our example, we can see here, so we have our fair value gaps, breaker structure, we have our small liquidity sweep here, okay? We have these three. Now what we do is we anchor it from the swing low here to the swing high, okay? And then we place our entry here at the 0.75 fib level, okay? This is the 0.75 for me. Oops. This is the 0.75 for me, this line here, okay? So this is my 0.75 fib level. So once we've done that, we ultimately wait for price to come down and take our limit order, okay? Enter in off our limit order. So we can see here, price is tapped in at this point, okay? And then shortly after, once we've been tapped in, we've moved up and we've hit take profit, okay? And I'll show you on the screen. That's how I've made more than $1,500 in just these simple steps, okay? This strategy, so easy, it's so simple, okay? You really don't need too much knowledge, okay, in the markets and all this kind of stuff. It's a 10 minutes a day thing, and you can be making trades like this, like I am, for over $1,500, obviously depending on your account size and everything, but that's how I make $1,500, okay? Simple as that. We can see we have our liquidity sweep, we have our breaker structure, we have our fair value gaps, we have our market structures, big swing points here, okay? Wait for price to tap in, we tap in and we hit take profit, okay? It's as easy as that. There's really nothing more to it, okay? There's trend, break structure, liquidity sweep, fair value gap, and we enter off the 75, hit take profit, okay? Very simple strategy, very good strategy, okay? You only need about 10 minutes a day actually checking all the pairs here, okay? You can see here I've got a decent amount of pairs that I check and I trade off, okay? So that's how easy it is to trade this strategy. So you set your risk and you let it run, okay? You set your order with the right metrics, so stop loss, break even, take profit, risk percentage, these kind of things, okay? Your stop loss is this point here. Your take profit is this high here, okay? My break even here is this 1-to-1. So once price hits this point and reaches this point here, 1-to-1, it's break even. So then if price comes back down here, I'm tapped out and I lose no money on the trade. Okay, how good is that? And then if not, price just continues moving forward and hits take profit. Okay, fixed 1 to 3 risk reward on every single trade. Okay, so every trade I make is a 1 to 3 risk reward. Okay, here we go, -1 and then +3. Once you're in, hands off until it hits stop loss, take profit, or break even. Break even is that 1 to 1. Okay, I risk 2% on my account just because I trade on a personal account, but you can be risking 1%. But either way, that's how I'm making $1,500 per trade. Okay, it really is that easy. Super simple 4-hour strategy, 4-hour time frame strategy with only 10 to 15 minutes a day. Okay, this is a golden strategy. This is a great strategy.